It takes 10 slow years for property to double in value. That is 100% wrong. In today's video, I want to show you exactly why properties double every 5 to 7 years, what has happened in the past, and exactly how I've been able to double assets in my personal portfolio in just 4 years. And I know what you're thinking. Well, hang on, that's what everyone says. Everyone is either broke, hasn't got a property portfolio, does not know when property doubles. So let me show you or introduce you guys to what we like to call the 5 to 7 year boom phase. What you will find, so I get out my other little Sharpie here, the best texter in the planet. What you will find is that the actual doubling of value happens over a 5 to 7 year window. So, and we can look at, almost every example, right? And again, this is not every single market, but what we have found by our own personal experience and obviously all of our clients' portfolios and really just history and data and facts, property doubles in that period. Look at Sydney from 2012 to 2018. Assets doubled. Perth, 2020 to 2025. Look at Geraldton, over 150% growth from 2002 to 2008. Same with Hobart, 150% growth. And my favourite, Bundaberg, which I'm going to touch on very, very soon, which is actually an asset that I purchased from 2018 to 2023, assets well and truly doubled. 100% growth, okay? Let's walk through why you as an investor, you need to be getting in right at the start of that growth phase, right at the start, before the growth happens. This is where people get it so wrong. We just finished a podcast talking specifically about this. People think that once you get into a market, regardless what that market has done prior, right? They look at a market and they'll go, cool, well, the market's done 30, 40, 50% growth over the last couple of years. Now is a good time to get into that market. Now, yes, if you're talking, you're going to stay in that market, in that asset for 30 years, sure, that's fine. It's 30 years, it's a long time. You can afford to make a mistake and get into a market 2 to 3 years a little late. When you treat property as a profession, and you become a sophisticated investor almost, what we do and what you should be doing is you should be looking at a market that is right at the start of its growth phase. I'm talking when a market has done 5% growth the year before, 3% growth. We just got into a market recently. We visited the site. The market has done 3% growth from 2024 to 2025. Most investors would look at that and go, oh, you're too. If you understand the metrics, that is the perfect time to get into the market. Why? Because every single market will have 5 to 7 years of double-digit growth. You want to get in right at the start before it's done any double-digit growth. Now, obviously, it's not that easy to go, well, hang on, next year, this asset and this market is going to do double-digit growth when it's just done 3%. But if you have the understanding and you have the metrics, you can do that every single time. And that is exactly what we've done. Let me show you actual examples. Bundaberg. Purchased a property back in 2021 in Bundaberg. By 2025, that asset, I should mention, I purchased the asset for $412,000. It was a duplex. You probably heard me talk about it a fair few times. Awesome asset. The asset today, I actually got values done 2 weeks ago. The asset today is worth $850,000, more than 100% growth in 4 years. So that's actually less than the 5-year growth period. Our good friend and great client, Anthony, he purchased a property in beautiful Rockhampton in Queensland also. He purchased an asset for $275,000 in 2021. The asset today is worth $550,000. Dare I say, the asset by 2024 was worth $550,000. So the actual asset doubled in an actually 3-year period. If we were to run valuations and actual comparables, the asset would be well worth above $600,000. What I'm trying to tell you is buying an asset and expecting it and just being okay with it to double in 10 years, like, great, you're going to do better than most. But if you're looking to do something in property that not many people do, one of the most important metrics that you should be looking at, and really the way that you're going to kind of speed up the entire process and kind of shorten the period. Let's say you've got a goal of achieving $150,000 worth of income, one of the biggest components of that is being able to identify when you're at the start of that growth phase and how quickly you can double that asset base. Had I done this 4 or 5 times back in 2021 and I turned, I don't know, call it $2 million worth of assets into $4 million worth of assets, and I achieved that in a 4-year period, I could sell down every single one of those assets, purchasing 2021, and I could use that $2 million worth of free cash to then throw into whatever asset I want to reach my goal. Why take 10 years to achieve a goal when you can do it in 4 or 5 or 6 or within that 5 to 7 year period? I hope that was helpful. Property does not double every 10 years. On an average, it does. If you buy correctly, property can double, as you can see here, from 3 to 7 years to your success.